Well, good evening, everyone. Welcome back to the channel. So here we are today with a follow-up to the smashing success of an interview that we had with Jay on Wednesday. So the interview did so well. I wanted to give it at least a day or so to just roll, because that's what typically happens with very successful videos. But anyway, obviously there's a lot we didn't get to. There's been a lot of reaction, mostly positive, but there's some consensus on things that we didn't discuss, and still some concerns that I wanted to address in this video. So I'm going to go into options a little bit in this video this evening, because I think that there's a misunderstanding of certain aspects of how options work. And it's important for everyone to understand what they're in when it comes to yield max funds. But what I want to do first, I'd like to go into the comments section of my own channel so that we can address some of the things that maybe didn't get answered or were inadequately covered. So for those of you, and I had several of you that say, oh, you should have pressed harder on this or that. Well, until you've actually interviewed someone, you don't realize how tough it is in the heat of battle, so to speak. It's easy. Like, I've even gone back and watched, and I said, oh, I should have said this, should have said that. It's easy to do, but when you're live like that, until all of you all have done it, you won't quite understand. Anyway, with that being said, let's go into some comments here on the channel. And I think we've gotten like almost 300 comments, which is incredible. So I've tried to respond to each one of them. And obviously there's more in the Discord and whatnot. I know there's a couple things that he did clear up that you all seem very happy with, such as the answers to the Defiance questions. Some of you actually feel more reassured as far as buying into those. Now, my pushback on that, like I've said with QQQY, the NASDAQ has been on a bull run of over 1,400 points in the last 3 weeks. And we haven't really seen any appreciation in the QQQY. So without understanding options, that would be a cause for concern. But taking into consideration that Yield Max and Defiance employ pretty much a similar strategy, you have to understand how covered calls work, which I'm going to try to go into, time permitting, in this video. I'm actually going to go into some example covered calls, because covered calls are really at the core of what they're doing. And what happens when stuff runs up, those calls come into the money, then they either have to be rolled out or bought back. And then when they're rolled out, obviously they roll up, which generates higher premium. But it's complicated. You're not going to just see the funds go up necessarily just because the stock goes up. It's more complicated than that. So we'll go into all of that. But anyway, I'm trying to pull up my channel here. And let's see. So, and for those of you that are tuned in live, definitely feel free to comment and, voice whatever feedback you have on the interview if you haven't already. So while I'm pulling this up, let's see. Me personally, I couldn't be happier with the interview. We're finally up to over 3,000 subscribers, thanks to the interview. And for those of you that haven't checked it out yet, the podcast interview on Brewing Great Returns, the podcast channel, that should definitely be watched, I would say. So I'm going to go into a little bit of a backstage tour. I'm going to go into my own studio and show some of the comments here, because that's probably our easiest way to go about things here. And I can tell you, I've spent a lot of time responding to comments from all of you all over the last couple of days. It's been kind of surreal. But anyway, without further ado here, I'm going to share the screen. Let's see. And so far, no comments from all of you all watching. That's a surprise. I only don't read them when we're in the interview with Jay and we have 200 comments. It's kind of hard to pull them all up at once. So let's see. All right, I'm going to share my screen here. And okay, here we go. So we're going to start with comments, because a lot of the questions that didn't get answered came up in the comments section. So this is what we call, screen should be up any minute. This is what we call the backstage of the channel. Now this comment here, this is responding to another video. So I'm just going to focus on the ones from the Jay interview. This one says TSLP doing much better than TSLY at the moment. It's up 12% in the last 3 weeks while Tesla is flat. Interesting. We'll have to check that one out. I like the name, by the way, Greater Dividends Coming. And then we had a comment from Andrew Saunders here. You all don't seem to understand what Jay is explaining. Why are so many novice investors asking when and how the NAV will go back up? Income first, income first. Buy Tesla if you all want the upside, but the distributions are pretty good on Tesla. I 100% agree. Like I said, and not to insult anyone, but a lot of people get attracted into these funds because more or less everyone, including myself, everyone's looking for an easy way to make big money. And, you know, no pun intended, but it's not always easy. But I think a lot of these funds that there's many YouTube channels covering these funds, and obviously these funds have helped all of us get a lot of views, not just me. But it's really easy because you put 70% dividends in the thumbnail and you get views like crazy. And then of course, who doesn't look at 70% dividends and want to buy in, or at least be very strongly enticed by it? So that's kind of what's happening there. Anyway, I'll respond to this one later. And then of course, so I responded to this one already. This guy actually is the one that put us in contact, me and Jay. So kudos to him. One of my top fans. Don't see him on too much anymore, but yeah. So, and then got a lot of positive feedback, a great video. I definitely love it when you all say, give me good feedback, but I really focus more on the tougher feedback because that's what really sharpens my skills, you know, to go off of that, so to speak. And I had some interesting things come up in other Discords. I had some of you, I guess, think that I'm not such a nice guy, and that shocked me, really. So I wasn't aware of that. You know, sometimes I think that, you know, my self-awareness may not be what it needs to be, but that definitely shocked me that there are people out there that feel that way. So for anybody that does feel that way, I'll send virtual flowers. So anyway, just kidding. I am really a nice guy. You know, I just have a sense of humor that it's a bit of an acquired taste, just like certain alcohols. Okay, so Jimmy Smith asks, second question, if we always get the time decay. Now, this was a really good question. If we always get the time decay, there should be no reason we don't get good distribution each month because there will always be time decay. That's right. Yes. And because of the way that they're managing these positions, they're maximizing the returns in terms of dividend returns that we're getting. So Jay explained several times, if you listen carefully, and I've gone back and listened, he explained several times that they're focused more on maximizing income than preserving NAV. And with a covered call strategy, so the closer they are to being in the money, the more of a premium they're going to capture. So correct. I mean, the dividends really haven't disappointed. Even at 44 cents, that's still a better dividend than most other funds are paying. So, but that's definitely a good question. I can certainly understand the question. And again, we've seen a consensus adding Tesla stock. If you want the upside, buy into Tesla stock. That's not a bad idea. I've done that myself. And then, oh, here's another channel. Look at this. All of you all that are commenting that are other channels, I'm going to hit you all up for a collab. So, by the way, since I hit 3,000 subscribers, my rates have officially increased. Clap, clap, clap. I've got to join the inflation bandwagon after all. So I decided just arbitrarily. I didn't decide arbitrarily. I'm sorry. Like, I carefully crafted a price structure and determined that my time is worth $100 an hour. So that's the cost now for my time for doing collabs and whatnot. I'm just kidding. It's a little bit of a joke. But hey, you know, when you see inflation, it makes you want to jump on the bandwagon for sure. Anyway, that being said, so yeah, there's another YouTuber there. That's really cool. How is Coney growing and paying out like this? That's something I actually don't understand, because if you look at Coney's growth versus TSLY, they're completely opposite. But if you look, Coinbase stock had a very similar run up to Tesla, but yet we're seeing Coney do this, and we're seeing TSLY kind of do this. Not so much this. Well, we have seen it do this since July, but kind of just dropping a little bit. Let me check. Let me see if I can see comments here. Okay, perfect. So I can actually see comments on the phone here, which I'm on. Hog Farmer's the first one on. I missed your question. I know I did say that was the most important one, but missed it, unfortunately. Maybe if a super chat came in, I would have asked it. Actually, funny thing, Jay must have watched that because he did reference your question. Anyway, I could tell. So, let me actually pull these up here. Or can I do this on here? That's weird. You know what? I can read them, but I like to put them up on the screen. That is funny. I'll get the comments later, actually, even though I can see them on this screen, because I want to be able to pull them up. I like to put you all's comments up on the screen, but let me focus on these for now. Anyway, oh, somebody answered this. Because the underlying is up 30% in 1 month due to ETF discussions for crypto, hard to not do well. Coney is only up 18% in that time, not including dividend though, but still, I mean, how much is, well, Tesla was up like 6% in 1 day. You know, I'm going to have to, since I'm using my phone was my calculator, but I'm going to have to probably go back to an old school calculator. I'll be right back. Give me like 2 seconds. Oh, it's over here. Aha, a little old school. This is the calculator they made me buy in finance class. So, okay, so Tesla ran up about $60 from, what did it bottom out at? 190? So that's a 30% increase as well. So someone's got to riddle me that one. So Coney is up 18%, while Coinbase is up about 30%. Well, so is Tesla. So even though I get it, I still don't get it at the same time, if that makes sense. And actually, look at this. I actually said this in my own response here. See that? And then one of my favorite fans here, I thought this fund to be a great passive fund to hold for retirees. Seems, well, no, it's not. The only way for this fund to be profitable is to drip your distributions. Yeah, you have to actively manage it. Like Jay said in his own comment, you can't just go to the Bahamas and leave it alone, because it might be nothing there by the time you look again. One thing I notice, and this is something that puzzles me, I guess, because I've always been into money. I've always been into numbers and whatnot. But I hear a lot of people say, I just don't want to think about money. I just want the money to be there when I need it. Well, the paradox to that, like I always say, to get to a point where you don't have to worry about money, what it takes to get to that point is to become good at being able to worry about having money, if that makes sense. It's kind of a paradox. So yeah, to be good enough to have enough money to not be worried about money, you got to be good at worrying about money. So I've never really understood that. I know everybody's not numerically inclined. That's probably hopefully why we come here, and everyone's welcome here, of course. But yeah, that happens a lot of times. And what frustrates me about that, I mean, anyone can be any way they want to be. Obviously, it's a free society, but you can't not care about money and then be upset when it's not there. You know, that's kind of the problem. So, and that's not me being mean. That's me just speaking bluntly, giving maybe a little tough love, so to speak. So I don't want to run anyone off into another Discord. Although we did have to do some administrative stuff today in our own Discord, so that was always interesting. You all have definitely given me a lot of, shall we say, drama to deal with in the last couple of days. Anyway, okay, Unorthodox has an unorthodox comment here, more or less, probably. No way should you use this for retirement. See, just like I just said, right? All yield max and defiance funds are too risky. I'd watch for 6 to 9 months before buying. I think the jury will be in them. Yeah, I agree with that. Let me try to move a little bit faster here. Oh, he responded. Now, when I respond to comments, I typically respond on my phone, so I don't always see your follow-ups. So if I seem like I disappear or ghost you, that's why. But I'm here now, so let's see. He said, of course, we should manage our own stocks. I'm just trying to find a reason to own them. Okay. After listening to the interview, I still cannot find one. I was hoping our host would give me some insight, seeing that he thought he was important enough to invite on the show. Well, yeah, of course. My opinion is the only use for covered call ETFs is income for retirement. And then he responded, I love my JEPI, JPQ, BlackRock, Goldman do too. Just open copycat ETFs. That's a good point. Very good point. So I'll try to respond to all these later, but I'm not going to waste you all's time responding to these now. Let's see here. Coach, I bank with SoFi, and today, oh, this is another video I did. Today, discovered they have launched THTA, and they hired Jay from Zega to help actively manage their monthly ETF. Can you take a quick look, please? I definitely will. Okay, and these are responses to some other ones. Somebody asked, will they have a fund based on the gambling sector? I think that would be a great idea. And he probably has that in the works. Now, he did email me today, and he wanted some feedback. He wanted to know how things did. And I thought he probably saw it already, because he definitely checked out the one beforehand. So, but I'll get back to him. I'll actually send him the links for both of them. Okay, what exactly is the point of owning Tesla for income if you shouldn't spend? Now, this question's come up a lot. What's the point of owning Tesla for income if you shouldn't spend the distribution, according to Jay? Well, I think what he was saying is that you shouldn't buy into this and expect it to just consistently pay off your mortgage and pay all your bills. And like I asked him, if you have 100,000 and it's a 50% payout, what do you say to the person that says, hey, 50,000 a year, I can just go retire? Well, not necessarily. You have to actively manage these and pay attention to them. So I think that's where he was going. Yeah, it's income. You can do with it what you want, but don't expect consistency, if that makes sense. That's where I think he was going with that. So the suggested gambling ones would be Las Vegas Sands or DraftKings. Makes sense. Yeah, I think that would be interesting. Will they have a fund? Oh, yeah. He asked that twice. Great video. Oh, yeah. A lot of you do like this. Let's see. Do not reinvest. You're in a sinking hole with reinvestment. Just take dividends, put into something stable. At the very least, you will make back your capital about 2 years. I'm going to try to do another video where I actually do the math on that with declining NAV and reinvesting the dividends and see how long it would take. Stay tuned for that. I'm definitely about to step up the content on here for sure. This was an awesome interview. Yeah, thank you for that. I like positive comments, but I do kind of gloss over them because I got to get to the mean ones. If you have to keep reinvesting dividends, there's no real cash flow. Again, consensus. Let's see. Is he saying if we have more up days than down days, as in QQQY and JEPY, then the NAV will increase because they're holding the premium for the put for themselves, giving the unit holds all of the time decay? If that's the case, shouldn't the NAV increase again if they have more positive days? Is that a way to stop the capital erosion that happens to most of the covered call ETFs? I'm trying to wrap my head around this. A good question for sure. What he did say, he compared YieldMax to Global X, which does the QYLD, the RYLD, XYLD. Those were the ones, I feel like those were like the YieldMax of last year. I remember those were like all the rage, so to speak. So what he said with those go further out of the money, and then they actually end up harvesting more money that they then try to reinvest for you, or they may pay it out later. He said they would rather, maximize the payout. And that's really the big differentiator there. So I remember him saying that several times. And then again, is it really income, though, if you have to reinvest to keep your portfolio even? The point of income, real passive income, is to be able to replace earned income, right? Well, keep in mind, okay, so the last, since July, what is that, 4 months or so? We're 4 months removed from being close to all-time highs. So, things change. I mean, it does work. There are times it works. Like if you look at Coney and AMDY, there are definitely times it works. So what I want to do now, I'm going to switch over to comments real quick just to check how we're doing. I don't want to leave all of you all hanging on the live. I did see a lot of good comments coming in there. So let me go back here. And, 69 of you on. How about that? Awesome. Okay, let's see. Well, not too many comments, actually. We did get a reference to that question earlier. That is actually funny. Stephen T says, can you go further into Jay's reasoning behind why selling calls 5 to 15% out of the money might not be advantageous? I understand income is the primary goal, and income is mainly generated from theta decay. The sense that I got, and he explained this pretty well, I thought, like I was just saying, it's better for them to go right at the money to harvest as much premium as possible, rather than going out of the money and then getting caught holding the bag on some of them, like QYLD does. I thought he explained that a couple of times, but I get it. I mean, I want upside too, just as much as all of you all do. I definitely would like to see when Tesla runs up $60. I would definitely like to see Tesla run up as well. Now, I do know that Tesla happens to be like the most volatile stock in the world, so it's tricky. Let's see what we got here. Get some Tim Hortons coffee for that Keurig coffee maker. Hey, that's not a bad idea. I try to stand in front of the camera a little bit because I'm at a little bit different of an angle, showing you all more of what's behind me because I'm on my phone now, so I don't want you all to see too much the mess. But we can certainly, to give a bit of a plug to my podcast, we can certainly always brew some great returns, right? Yeah, I've got 2 of them. I don't always use the Keurigs because the regular coffee maker, I feel like it's stronger. These Keurigs, they jip you. They have like half, the cups are like half full. Anyway, and you know what's funny? Green Mountain Coffee, that's a stock I used to own. That was like a 2-bagger for me. So speaking of baggers, I'm overdue for the audiobook. I meant to do it yesterday or the day before, but I just got sidetracked by all the Discord drama. So anyway, yeah, good observation there. Hog Farmer still miffed that his question didn't get asked. Oh well, maybe next time. I know that's an important one, but we'll get to it eventually. Nav question kind of hit Jay as an adolescent question. He's only focused on income. There's a couple things I noticed in the playback. I noticed he thought, I think, that I would follow up with him a couple of times, but you all have to realize, like, I don't know how much interviewing you all have done. I know when I say this, I'm going to get somebody in the comments that says, I interview people every day. Well, good for you if you do. But anyway, I'll stick to my original talking point. I don't know how much interviewing you all have done, but it's tougher than it looks. Like getting the person on, getting started on time, asking all the questions that all of you all have, filtering the questions and whatnot. It's definitely challenging. I don't envy those debate moderators and those debates. I mean, they have to do their network's bidding and all. Just a little bit of a joke. But anyway, at least I'm not beholden to a network, right? Stephen T says, because Coney has several short calls across a few different strikes, capturing more upside. Well, there you go. See, you all kind of answer each other's questions. Actually, Jay did say that. So if you think about it, yeah, they're across different strikes. And keep in mind, if you all look, you can go on the YieldMax site, and we'll do that. And you can see all of these. You can see the different strikes. You can see all the positions they're in. I think that's actually very transparent. So let's see. Cash Hawkins says he learned something from the interview. All right, good. We've done our jobs. So learn from the interview. He's making a lot more money than they are paying out. Oh, that's interesting. Wow, he referenced that about QYLD losing wasted money. Yeah. That's what I was mentioning too. Somebody tried to tell me something like he's making $400,000 a day. Because I was actually going to point out, like, he's come on here like 3 times and he's never asked to be paid for his time. So I thought that was pretty cool. I mean, if you're a fund manager, your time's got to be more valuable than a YouTube channel, I would think. Anyway, I don't know. My time's pretty valuable. Cash Hawkins, I wonder if we're getting a big dividend in December because they're obligated to pay 90%. They're obligated to pay 90%. Well, it is Christmas, so maybe we'll get a nice Christmas dividend, right? Like they would pay just for that reason. You would be correct. Happy holidays. Or maybe it'll be a Kwanzaa dividend or a Hanukkah dividend. Could be any holiday, right? There's a lot of them. Maybe a New Year's dividend. or a return of capital, right? We did get into that, by the way. What's the difference between a return of capital and a dividend? Well, I call it like it's a long-term capital gain payout. I've gotten those in mutual funds before. Not that I would ever touch mutual funds again. Coney has strikes at 93, or excuse me, 90, 93, 94, and 101. All contracts seem to be evenly distributed. Test Fleet has 230 and 255, with all the contracts at 255 and a small amount at 230. Yeah, so there's more of a spread, I feel like, on Coney. You take income when you're in the green. Perfect. Couldn't have said it better myself. Okay, let's see. What time is it here? Oh, I'm about 10 minutes behind on comments. That's okay. We'll switch back to the YouTube ones too. And then I want to go into, I want to do a little bit of a options workshop for maybe 5 or 10 minutes. I think it'll help all of us. It'll help me too. It's like a refresher. And I've traded covered calls myself, so I can relate. It's very frustrating when they come into the money. You got to figure out what you're going to do very fast. Now, if you all haven't seen yet, our Brewing Great Returns podcast that he's on, and definitely subscribe to that if you haven't already. But we did go into, like, I asked him specifically, what are your criteria for hiring someone? And he said, basically, you have to be a coach on YouTube. You have to have at least 3,000 followers. I'm just kidding. No, he went into detail on what it takes. And he's definitely hiring the most experienced people. So I have confidence there. Okay, let's see. So, yeah, we went over that one. 90% of the time decay portion of the options premium. I believe so. I'll definitely watch again because Jay's very smart. I mean, I have to listen twice sometimes. Zega is the sub-advisor of a new SoFi ETF. Oh, great. After the SoFi situation, like what, 7 months ago or 8 months ago? Oh, somebody else just said this too. Ticker is THTA, like Theta, right? Doing credit spreads on all 3 indexes. In the prospectus, Zega is using proprietary software. Ask Jay next time if possible about his software. That did come up. That was one that we missed. I think, so I would like to have him on like once a month, but I think if we can get him on, every quarter, that would be good too. So far, that's what we're pacing. Adair Martin says, global X funds sell at the money. I don't think that's what he said. I'll have to watch again, but let me see. Denny Keaton is on with his customary howdy. Thanks for that. Passive earnings. How about rolling through options at the money or out of the money? Yeah, we're going to go through that in our little workshop that we do here. Rolling options. That's what these ETFs are for. Income. This is going to be a good one. So is the lottery. It makes much more money than it pays out. All business does if it's run properly. True. I roll my covered calls. As long as I am getting premium, it's worth it. And I roll trolls. Okay. I'm looking on Tesla option chain. 7 days to expiration, 5% out of the money would pay around $400 per week on 100 shares. Something is really effed up with this fund. I trade options as well. Why would Jay go 2% out of the money weekly? I thought he addressed that, but I'm still, definitely have concerns on that too. Cannot wait for Jay to do covered calls on the new spot Bitcoin ETFs when they come out. Yeah, we'll see. The Global X website says they sell at the money. We'll have to clarify that again. Okay, let me see here. I'll leave something up here, and what I'm going to try to do is pull up E-Trade, and we're going to have some fun here. We're going to go into a little options trading workshop. Maybe I'll impress some of you all. Okay, so while we're doing that, I'll keep you all engaged here. So, yeah, 7 days expiration, 5% out of the money. It definitely would be nicer for us to capture more of the upside. I would definitely like that. I mean, but like I say, buying into Tesla stock is also, it seems like a good option, no pun intended. I've done that before myself. So, oh great, doesn't want to let me log in. Hang with me here, people. Yeah, I think really what we'd like, I mean, some call it having your cake and eating it too. We would all like to see these funds go up and get our nice dividends. You know, I mean, that's always great, of course. So, all right, well, we're pulling things up here. Now it's going to come up. I think I have an account like with all the brokers. I like to, there's different features of each broker that I like. Ameritrade, I really like the Thinkorswim. Of course, we're with Schwab now. I have a little bit of E-Trade, a little bit of Fidelity, and there's like 4 of them. So each one kind of brings something unique to the table. So anyway, all right, let me do this here because I don't want to share any sensitive information. Oh, and then another interesting difference too. A lot of brokers pay on different days. Like on my Charles Schwab, I got my dividends yesterday, but I didn't get my dividends on E-Trade until today. So there's definitely a little bit of a disconnect. Okay, let's have some fun here. I haven't done this in a while with all of you all, but I'm going to go into some example options trades here. Let me minimize this comment first. I got to tell you, Jay really juiced the audience. We're almost back to 100 live viewers. It's like old times, like 3 months ago. Okay, Global X site. Let's see. Why would Jay go 2% out of the money, lose many trades, thus only paying 4% a share, or 4 whatever? Yeah, I don't know. We'll have to ask him next time. Anyway, let me go through this for you all, just so that. What Stephen T. I would love that theta decay based ETF on the 3 big indexes. YieldMax might have made some mistakes. All right, let me share the screen here. And all right. So for all 81 of you that have stuck with me so far, here we go. We're going to go into E-Trade. Now, I like the way E-Trade has this layout. So what we're going to do here is we're going to do an example options order on Tesla. We're gonna pretend like we work for YieldMax for a second. Okay? So Tesla is currently $234 a share. We're going to do a call. So we're going to do an example of a covered call because I want to show you guys how this works. Now, instead of buy to open, we're going to sell to open. And we're going to, so here's what you'll notice here. And this is what I really like about E-Trade. This can get dangerous because when you start playing around with this, you start to say to yourself, wow, I can make this much money doing this. But I would advise to exercise caution because I've done this before. It's very tempting. I've seen on some stocks, I'm like, whoa, if I make the right trade, I can make like 60 grand in premium and just retire tomorrow. Yeah, I want it out of my old job that bad. So what I want to show you all here. All right, so if we were to sell one covered call on Tesla stock, now keep in mind, in order to do that, you have to be able to look at a camera and speak coherently, for one thing. Just kidding. To be able to do that, you have to own 100 shares of the stock, the underlying stock. Or the way around that, you can do what's called a poor man's covered call, where you can own a leap option, which your broker will recognize as 100 shares of the stock. Didn't think the coach knew so much about options, did you? Anyway, so, all right, so if we were to do this, and this one expires November 24th, which is next week, we would go further out than this. But what you're going to notice, on one covered call, this would generate us $500 in premium. So here's the deal, all right? So when you sell this, you generate the premium regardless. But here's the problem, okay? So the strike price, which is the underlying stock price projected, when an option comes into the money, the option or the underlying stock only has to go up at this point by 95 cents to hit this strike price. So this is basically right out of the money. So why is this risky? Because if we go up 95 cents, which Tesla moves a lot in a day, so you could look at this and say, oh yeah, I'm going to do this. I make $500 right now. Perfect. I'll do this. And I'm going to go to the beach tomorrow. You know, of course you can't do that because the market's not open tomorrow. The market's not open again until Monday, but just say it's Monday. We don't want to fast forward the weekend, but just say that it's Monday and you do this and say, wow, I made $500 just like that. And then you ignore it. Well, you could come back and find out that your account's blown up depending on how much you did here. So here's what would happen. your premium, you always keep that, right? But then your 100 shares of Tesla, which you paid whatever you paid for them, right? All of a sudden you could find that they're gone when this expires in the money, because that's what happens. Because what you're doing with a covered call, you're giving you're selling to someone else, the buyer, you're selling the right, but not the obligation to take over all your shares, to buy your shares at this strike price. Okay, that's how options work. You're selling rights, and you're buying or selling rights and obligations to enter a stock at a certain price. So you're trading away the premium that you pay for that. So this is risky because this is only $1 out of the money. So, and here's what happens. Here's the conundrum. So the further we go out of the money, what do you notice about the premium? It just dropped. So to answer you all's question about, well, what happened with going further out of the money? Well, when we go further out of the money, like if we go up to 240, what do you notice? We just sacrificed $85 in premium. And so if Tesla was to run up, which it's been doing, and you'll notice, I mean, Tesla could very easily, the way it runs, it could get to 250, 270, or 300 in a week, you know? So, hold on a second. What's Tesla going to do? Will Tesla get to $300 next week? It says no. All right, there's nothing we have to worry about then. I'm just kidding. That's a little inside joke. I know we've welcomed a lot of new fans in, but this is something we do on here. We have some fun, some inside jokes. Like the 8-ball. The 8-ball gives us all our investing advice. Just kidding. There's no investing advice on here. So, now what do you notice? If I go up to 260, whoa, we're getting nothing all of a sudden. We just 10x to the downside our premium. So the further out of the money we go, the less premium we get. So the only thing I can assume is that's why they're going so close to being in the money like that, is to harvest more premium. Again, it's yield max. They want to pay out as much as possible. Now, okay, so that's one thing. So when it comes to, because you're trying to capture like the time decay and the premium. So you can either go further in the money, or what's the other thing you can do? You can stretch your time horizon out further. Some of you are thinking, wow, I didn't know the coach knew so much about options. Well, I actually learned everything I know from, so I have, every coach has a playbook, a decent playbook. So I have my, what I call options cheat sheet. So everything I learned about options, I learned from here. I'm just kidding. I know options, but I do have that. And that doesn't tell you half or not even a fraction of what you need to know. Anyway, with that being said, so what's the other thing we can do here? We can go out further. So if we were to go another week out, here's what you'll notice. Same trade, right? But now we're at December 1st. So then the same trade is going to get us a little bit. It should be, yeah, see, that's another $100. So now if we were to go back to like the 235 that we originally started at, let me just check comments here. Some of you are probably going to be like, I can't believe he's going over this. We know this. Not everyone does, clearly, because if you did, you would understand yield max a little bit better, right? So let me just check here. Oh, Passive Earnings loves my presentation. I love that. Awesome. Let me see here. So on my phone, I can't actually pull up the comments here. Someone named TD Travels is on here. Blake is on here. Let's see. Okay, we'll look at these later. Well, Passive Earnings, he's a big options guy, and he loves what I'm saying, so I must be doing something right. Okay, so with this one, now here's what you'll notice. If we go just a week out on Tesla, okay, so from November 24th to December 1st, so we just went from, watch this, we went up, we almost doubled our premium, right? And this is what you all have to understand and internalize to better understand yield mix, because this, at some level, this is what they're doing. So watch this. November 24th, we're at $4.99. A week out, we're getting another $300. That is coming from time value because you're further out. So that's $800. Now, if we were to go another week out, then it's $1,000. So as you start getting a further out, the increase in the premium becomes a little bit less and less till it starts to plateau. Say we were to go all the way out to January 2026. Look at that, $7,500. And that's like one trade. So that's tempting to make that trade, I'm sure. But what you'll notice by then, just say what you're doing, you're guessing what the stock is going to be at a certain time, right? So say you're going to guess it's $300. So then you sacrifice $2,000 in premium to go further out of the money, right? So we don't want to go that far, but you can start to see, even if you were to go to 2025, so a year costs you about $2,000. And then if we were to go to, say, January, then you would get only $250 because you're so far out of the money, right? So hopefully this helps you all to understand a little bit better. Now at 270, you're at $640. So you see how the premium changes based on time horizon, and how far in or out of the money, how close to being in or out of the money you are. So let's see here. Now, where it gets really tempting is, say somebody owned, and people that have a lot of money are doing this all the time, of course. Like there's an example with Apple stock. If you had like $100,000 worth of Apple stock, you could basically do trades enough to just live on that per year. So if you were to say you owned 1,000 shares of Tesla stock at the current price, so that would mean you just put all your nest egg into Tesla stock. Conceivably, you could do covered calls on your own and live on it. That could become sort of like your full-time job, right? You'd become like a day trader or a week trader if you're not weak as in terms of strong versus weak. Well, it depends on your results, I guess. We are a results-based society after all, but weekly as in weekly, right? So, all right, say you owned, what did I say, 1,000 shares? So 1,000 shares would give you the ability, or even 10 leap options, right? Would give you the ability to sell 10 contracts of covered calls, right? So watch what happens when you times 10. Look at that, $21,000. And see, because E-Trade shows this like this, it becomes very tempting. Trust me, I got baited into this last summer, like a year ago. I was like, wow, I can make it, but you can get into some really risky trades and blow your account. That's why, and like I say, with Tesla, with YieldMax, we have a professional team of fund managers doing it for us. And one thing, like I pointed out to Jay on the podcast channel, that gets a little bit lost in translation is if you think about the whole mutual fund versus ETF argument, right? So mutual funds, especially the retail ones, that a lot of them are crap, you could be paying 3 or 4% in hidden fees, which they call 12b1 fees, also known as expense ratio, more or less. With ETFs, they're much cheaper. So while Jay's charging like 0.99% or 1%, that's a lot cheaper than a retail mutual fund. And you're getting basically the benefit of a retail mutual fund where you have a professional team of traders doing it for you. So that's something that kind of gets lost in translation. Although a human being can screw things up just as bad as a computer, if not worse. So that's not always encouraging to everyone. But anyway, so back to this. So $21,000 if we were trading 10 of them. Now watch this. And this is what you see a lot of your Wall Street Bets crowd do when people start learning this. When you put, like there's a saying, with great power comes great responsibility. When you put great power in the hands of a novice or somebody that doesn't know what they're doing, they would do something like I'm about to show you. Like this. They would say, okay, how about this? One trade, $34,235. But here's the thing. What are the odds of Tesla running up $1? Not only just tomorrow or Monday, but by May of next year, I'd say it's like 100% chance, right? The best time these work, and this is another thing I'm surprised more people aren't saying, the best way that covered calls work in terms of being able to make consistent money on premiums is when the market is dropping. So then it makes you almost wonder, is it better than for Tesla to drop? Maybe in some cases. But if you go back to the end of 2021, beginning of 2022, our favorite year, when the Fed started actually increasing rates, the market started dropping. If you had sold covered calls in, say, November 2021, you would have been rich because you would have sold at all the high points of the stocks, all these big stocks. And what did they do from there? They did nothing but drop over the next 6 to 12 months, right? So you could have pocketed all those premiums and made some serious damn money, right? So, but here's the thing. We expect the market to recover in the next month or not month, but in the next year or so, especially with an election coming up. I'm sure everything's going to start looking really, really good. That I word will be unspoken. So with that being said, Okay. So with 10 contracts, if we were to go to like December 15th, right? So that's still in just like 2 weeks. You would think, wow, in 2 weeks, I can make almost $12,000. Or excuse me, wait, so that's almost a month away, but that's still $12,000 per month. Most of us would take that, right? But the likelihood of getting that to expire out of the money to where you keep that, very low, right? Because 12,000 times 12, if you could do that, that's 144,000 a year, right? So that would be awesome. But like I say, the odds of that are slim to none. But anyway, I wanted to go over some basics of options so that hopefully you all understand better. Now I'm going to pivot back over to comments, and then we will probably end it. There's a lot to cover. I'm not going to be able to cover everything on the channel and here. So let me just at least finish out the comments that are on the live stream. So I hope that was helpful to all of you all. So far, I'm seeing some good feedback here. Let me go in reverse order here. Oh, I got a starred comment. Meaning must be a super chat. Oh, look at that. I got a whole $2. I'll be sure not to spend it all in one place. But hey, thanks for that. Better than nothing, right? So, and look at that. You didn't even ask me a question. You had the right to ask a question and move to the front of the line, but you didn't even ask a question. Well, maybe you did here. Maybe you were just being polite. So anyway, well, thank you for that. Okay. Let's go back to the other comments here. Let's see. All right. I think I'm, as far as like options workshops, I'm probably workshopped out for the day. So we'll have to do it on another video. But you're asking me to demonstrate 7 days to expiration, 10% out of the money. You'll make more money than yield max. I'll do that, but that'll be for the more advanced class that we'll have on the next video. This was just kind of a beginner's class. That'll be for the advanced class next video. Let's see here. Watching this lets me know Jay is a genius. The coach knows options also. Glad you recognize that. Because I get the sense, so what I've done, if you all were to go back in the history of my channel, I used to be like really advanced with what I said. I probably sounded like Blake, but I feel like, and no offense to anyone, but I feel like I more or less kind of dumbed down, what I say just to appeal to a broader audience. But the side effect of that is some of you all probably think I'm just an idiot now. So I have to remind some of you that, hey, I actually do know my stuff, So I'm glad you recognize that. Trying to be fair here, realize how much I don't know. Lost in translation, Jay is an animal. Yeah, because, if I get this, I can only imagine, like, his team with all their experience. Like I say, some serious money can be made in these. And keep in mind, what I just did for you all for free, a lot of these people on here that sell courses, they're charging you money to learn what I just showed you for free. How about that, huh? Okay, so let me minimize this one, and we'll read some other ones here. Let's see. Have I refreshed the Discord link recently? I haven't. I actually, Varden actually did the link for me last time. I'll have to get with him on that and see where we are on that. I definitely want to keep people joining too. We had to actually kick a person out today, so we want to offset we don't want to have too much attrition. I couldn't join any of the 2 channels Coach has. We'll see if you have a link to your Discord that would work too for me. Hey, Varden, are you on? Can you give these people the Discord link again if you're on? Let's see. By the way, we need a Discord moderator too, because I've had to play that role and I'm not always reading it. But I had to be Mr. Not So Nice Guy today, which could potentially validate some of your theories about me. But it had to be done basically. Okay, I have calculated 450,000 is all I need to replace my primary income and some more. That's all you need? 450,000. Geez, how much do you make? Oh, you're talking about like as far as like total to use as a base to sell covered calls and stuff, right? Built a cushion in the calculation as well. Okay, that makes sense. For a second, I was thinking, whoa, he makes almost $500,000 a year. All right, let's see here. By the way, I had like 3 other channels reach out for a collab and I haven't heard back. So feel free. The offer is still open for that. Like I said, I only charge $100 an hour, and as a special one-time discount, I'm offering a 10% discount for Black Friday. So if you want to get me on, you can get me for a special hourly rate of $90 an hour. Just kidding. It's free. We're YouTubers. We're fellow YouTubers, right? So Passive Earnings, have you joined Discord? Generally best way to get a hold of him. I do check my email intermittently. Let's see. Hog Farmer says, do you have to hold the contract until expiration date? No, you can actually roll it. You can take advantage of the fluctuating premium. You can roll them up or down. But to capture all of the premium and not have to worry about your shares being taken away, yeah, you would have to let it expire. Okay, so we had some back and forth about Discord trying to reach out on email. Yeah, we'll definitely have you on as a guest for sure. But let's see. Oh, there's my buddy, Mr. Jim. This guy, he says. And then Tim Foley. When selling options, my rule of thumb is to roll when I've hit 80% of my premium. Makes sense. Many small wins equals a big win over time. True, true. We need to have you on as a guest so we can talk more of complicated option strategies. I agree. Wait, that one wasn't complicated? It really wasn't. Late to the show, but hello. Yeah, well, thank you. I saw you put your donation into the pot for being late. Just kidding. Let's see. Or 468 with 2 weeks until expiry. Oh, you were looking too. Yield max hunts for 1% per week, so look for something that will pay $234 per contract. I was just going slightly out of the money on that one. And it might not have updated because today was Friday, so the ones from today just expired. So you'll probably see that even lower by next week. 0.2 theta or less takes you 1%, as Blake said. Yeah, you're right. And let's see, last but not least, Passive Earnings loves this presentation. Well, that's great. All right, well, it's been real. It's been fun, you all. Thank you all for tuning in and watching for all 52 minutes. Like, comment, and subscribe if you haven't already. And definitely keep up with us. We're going to have a lot of exciting stuff in the future. So thank you all again. Take care, and we will hopefully see you all very soon. Next couple of videos I'm going to try to put out, and I'm going to actually try to get back to putting the one here and one here like I used to do. But yeah, next ones I'm going to do, the presentation on the model portfolio. That one's coming soon. So stay tuned for all that. Thank you all again. Lots of exciting stuff in the works. And we will see you all on the flip side. Take care.